Good evening, everyone. Time for this week's silver update. This is the 30-minute chart of the Euro US dollar cross provided by netdania.com. You can click on the link below. You can see here that the pop that we got out of the euro is not perfectly reflected in silver. We really got only about half the move in silver, respectively, that we got in the euro. If we were looking at them one-to-one, then recovery for silver should be at 29 bucks right now, and it's not. It's still down in the 27. So there's a ways to run if this is the real deal. Now we need to pull out a little bit because the chart shows us when we pull out, these really are very, very closely trading instruments, and you can see the beta is very high. They're very closely correlated. You can see the most recent one here. If they're going to continue that relationship, then silver will rally. Now, people would ask, well, why would they be so closely correlated? Well, and we're going to get into this when we look at the GEAB update and seigniorage, but the main reason is because these are both alternatives to the US dollar. The euro being the primary currency alternative, although it's my opinion that the renminbi will ultimately be the competitor that will win out over the dollar. But the euro is perceived as being a competitor, potential competitor to the dollar. Now, as we know, with there being no petro euros, it really isn't, and we'll see that when we get into seigniorage. But then silver, of course, is a real competitor to the US dollar, and that's going to be one, in my opinion, that may be the one that takes the dollar down. We'll have to wait and see. Probably the precious metals. They're a better alternative because you're, rather than relying on the whims of some other government or group of governments, you're relying on what other investors value the asset as. So we'll look at that more later. I wanted to go over to the question of the night. This is from Blue Vega, and he says, "Hello, Brother John F. I appreciate all the work that you're doing. I have a question regarding Mike Maloney and James Turk, who always state that we must own physical metals, and if we can't hold it, we don't own it. Yet they provide storage solutions which would stop us from physically holding our bullion. Don't get me wrong, I see them both as trustworthy and upright in character, but what makes their storage solutions different from other storage solutions available, and are their solutions equivalent to us physically holding our bullion? Wishing you the best, Blue Vega." Now, I don't think Mike Maloney or James Turk would say that it is the equivalent to you physically holding your bullion. I don't think either one would say that. I certainly don't believe that. But there are situations where their solutions are called for. Now, the first one that I would address would be a person who wants diversification. So I would suspect that many of their clients are people who have plenty of physical that they hold, whether it's, buried somewhere, or whether it's in a vault somewhere, or whether it's in a safe or wherever they keep it, who knows, at a relative's house. But I'm sure that those people have physical silver, and but they also have assets they want to be diversified. They want to be diversified in their silver, so they may have IRAs or something like that, or they may have retirement monies, or they may have just other monies that they're keeping there. Now, that's one reason, just the plain diversification. The other reason is that they may just have a lot of money, and certainly if it's silver, although I wouldn't like to not have control of my silver. A lot of people don't want to have carrying around a bunch of silver or dealing with a bunch of silver, so they're more likely to try to find a secure place to keep it. And that brings us to the next point, which is a lot of them are looking to keep it out of the country. Now, I don't know about Mike Maloney. I don't know if he has off-site storage. He probably does. I know that James Turk does, or you can keep it in Asia, or you can keep it in Europe. So that's a type of diversification that it would be very difficult for you to have physical silver unless you, I guess, jumped on a plane and hiked out to the Black Forest and buried your silver there and then came back, or something like that. So that's another type of diversification that another reason that people may decide to use those services. The other thing that I would say about those services, and I think it's probably true of Eric Sprott as well with the PSLV, is that those are inspected by an independent auditor, and the silver and gold are certified by an outside party that they're being held there. Now, of course, it's possible to pay somebody off, and nothing's perfect. That's why it's not the equivalent. But it's it may not be the next best thing either, but it is a alternative. And so those are the reasons, and there's a number of them, and everyone is different. The only other thing I'll say about that is that if you do have metals stored with them, unless you're looking for a big end game thing where everybody defaults, in the meantime, you're able to request your silver be sent to you, and they'll send that out to you. Now, that's not the case with the SLV. You can take delivery, but I think it has to be as high as 10,000 ounces or some ridiculous amount. So those are all the differences. Most silver stackers prefer to physically stack it, but there are people who are wealthy or want diversification or have other reasons, and they like to use the services by Mike Maloney and James Turk. Now let's get over to the topic of the night, and that's going to be related to silver and the euro, and this is going to be, we're going to talk about seigniorage after we talk about this GEAB update. Now, if you are familiar with this, I've covered the GEAB updates. GEAB is a European think tank. They have a European perspective, and they do not have a U.S.-centric perspective. So we'll read a little bit of this and then a little bit about what they're expecting. The progression of world events unfolds in accordance with the anticipations mapped out by LEAP 2020 during these last few quarters. Euroland has finally come out of its political torpor and short-termism since Francois Hollande's election, as France's president and the Greeks have just confirmed their willingness to resolve their problems within Euroland, thus contradicting all the Anglo-Saxon media and Eurosceptics' forecasts. From now on, Euroland, in fact the EU minus the United Kingdom, will therefore be able to move forward and create a true project of political integration, economic efficiency, and democratization over the 2012-2016 period, as LEAP 2020 anticipated last February. GEAB number 62. It's positive news, but for the coming 6 months, the second renaissance of the European project will really be the only good news at the world level. All the other components of global situation are in fact pointed to a negative, even catastrophic direction. Here again, the main media are starting to echo the long-standing situation anticipated by our team for the summer of 2012. Indeed, in one form or another, more often on the inside pages than in the big headlines, monopolized for months by Greece and the euro, now find the following 13 topics. I'm not going to go through all these, but they're concentrating on the U.S. here. This has always been their emphasis. I'm not saying I agree with them, but I definitely see their point of view. Basically, their position is that the emphasis on what's going on in Europe is a distraction created by the United States to get the eyes off of them, which is going to be the global endgame collapse when it happens. Number one, global recession, no engine of growth anywhere, end of the myth of the U.S. recovery. Two, growing insolvency of Western banking and financial system, and henceforth partially recognized as such. Growing frailty of key financial assets such as sovereign debts, real estate, and CDS underpinning the world's major banks' balance sheets. Fall off on international trade, geopolitical tensions, and there was one here about the retirements assets in the West. I'm not seeing that here. So let's go down to the summary. In fact, it will be characterized by an event which is very simple to understand. If today Euroland is able to address this period in a promising fashion, it's because these last few years it's gone through a crisis of intensity and depth unequaled since the beginning of the European construction project after the Second World War. From the end of this summer, all the other world powers led by the United States will have to face an identical process. It's at this cost, and only at this cost, they will subsequently in a few years be able to start slow recovery towards the light. So they go on with their bearish view for the United States. Now, they bring up this chart here. This is a chart that splashed on the front pages. I believe it was on Zero Hedge. And this is the change in the median and mean net worth. This is one that was put out by the Fed. And everybody was shocked by the nearly 40% drop in net worth that has occurred since the onset of the financial crisis. Now, of course, that is an absolutely startling number, and one would want to ask, how could that be so great? Is that real estate? Is that stocks? What's in that number that makes it up? But one thing that really jumps out at you when you look at these figures here is the difference between the median and the mean. Now, mathematically, the term median means simply the middle number, or the median, the middle. So if you want to find the median of an average and you've got a series of 100 numbers, then the median is whatever's at 50. Right in the very middle, that's your median. So let's say that you have, at the very top, you have some billionaires. At the very bottom, you have the very poor. Your median is going to be halfway numerically between those. While as if you're calculating your mean, you're going to add all of those together and then take the average. So normally when we say average, we mean mean. Now the reason why this is interesting is because you can see that the median drop in net worth is nearly 40%, but the mean drop is only about 15%. What does that mean? Well, what that means is that the people on the lower end lost a lot more, and the people on the upper end didn't lose as much. So this demonstrates exactly what many commentators have been pointing out, that the rich are getting richer and the poor are getting poorer. And it makes sense because the rally since the Obama election, March 2009 Obama rally, has put stocks nearly back to the way they were, but inflation and unemployment are still in a bad situation. So that's going to eat up the people who are at the bottom end, and that's going to cause this median to be larger than it normally would, whereas unemployment and inflation have very little effect on the wealth of the wealthy, who have been rewarded by the stock market and bond market rallies. So that's my explanation for those figures. Now, I wanted to talk a little bit about seigniorage, because that's one of the things that I think is going to be very important when and if this LEAP 2020 situation begins to come into play. Now, seigniorage is the amount of money that a government collects for issuing a currency. Traditionally, it was the tax, or it was the fee, I should say, for coining money. And so if it costs $1 and they collected, they sold $1 for $1, but they collected a little bit less in the cost of the metal, then that's a seigniorage profit that they make. Now, it can be a tax, and now that we have paper money, it's viewed differently, but the main point is still the same, is that the government that issues the currency has this seigniorage, and this is seigniorage as a tax. Some economists regard seigniorage as a form of inflation tax, redistributing real resources to the currency issuer. Issuing new currency rather than collecting taxes paid out of the existing money stock is then considered, in effect, a tax that falls on those who hold the existing currency. The expansion of the money supply may cause inflation in the long run. Now, overseas circulation is the part of seigniorage that I want to talk about here. A very profitable type of seigniorage is from international circulation of banknotes. While the cost of printing banknotes is minimal, the foreign entity must provide goods and services at face value of the note to obtain it. The banknote is retained because the entity values it as a store of value because of the mistrust of local currency. Overseas circulation is intimately tied with large value banknotes. One purpose of using foreign currency is for store of value, but another is efficiency of private transactions, many of which are illegal. American currency has been circulating globally for most of the 20th century. Certainly in World War II, the amount of currency in circulation was increased several-fold. However, the modern era of huge printings of the United States $100 bill started with the fall of the Soviet Union in 1991. Production was quadrupled with the first ever trillion-dollar printing of this bill. As of the end of 2008, U.S. currency in circulation with the public amounted to $824 billion, and 76% of the currency supply was in the form of $100 denomination banknotes, amounting to 20 $100 bills per U.S. citizen. Over the past decade, there has been considerable controversy concerning the amount of U.S. currency circulating abroad. Porter and Judson, etc. So it goes to talk about the different figures for how much really is abroad. There's a brief point here I wanted to point out about the size of the notes. The largest note is the largest American note is a $100 bill, but there's actually a 500 euro note, and that is a lot easier to carry. They point out here it's 22 pounds to carry $1 million in $100 bills of U.S. notes, whereas it's only around 3 pounds to carry the equivalent wealth in the Euro 500 note. There's also the 1,000 Swiss franc note, but that's not real common, as well as the Singapore 10,000 note, but that probably wouldn't be accepted outside of Singapore. So the question is, why do I bring this up? The reason I bring this up is because the United States has benefited from this significant seigniorage from the petrodollar ever since the 1971 closing of the gold window by Nixon, and also since, as they said, the fall of the Soviet Union. So with the United States dollar out there being held by all these foreign entities, that's a tax that they're paying to use our currency. Now, if LEAP 2020 is correct, and there's going to be a crisis in the United States and possibly a crisis with the petrodollar and world reserve currency status, you're going to see that reverse, and you're probably going to see the euro strengthen. If you remember, it was Saddam's euro for oil that caused the big controversy over there, and the same thing is going on with Iran now. So if the United States loses that advantage of seigniorage, or even has to share the stage with another currency for that, then obviously our share is going to decrease, and the value of the dollar is going to decrease, and the value of the silver and the euro are going to increase. And we'll talk to you next time.